Good morning. You're watching All You Need to Know on Bloomberg Quint. I'm Darshan Mehta. As far as the Asian markets are concerned, they're trading slightly muted at this point of time. The SGX Nifty is indicating that there could be a flattish opening. It's come off the highs of the day, but nevertheless above the 10,400 mark in trade. So the Qs were positive yesterday and the flow probably will continue. Most of the ADRs ended with a positive bias. Wipro was up almost 5.5%. Tata Motors, Infosys and Vedanta were the other counters which were trading higher in trade yesterday. What didn't do well was Dr. Reddy, which ended down flat in trade. As far as crude is concerned, crude is trading muted for the second day in a row. Overnight it fell over 1%, and in morning trade it's trading down by almost 0.2%. But Brent is below the $65 barrel per mark, and WTI is coming in close to the $61 barrel per mark. As far as base metals are concerned, all the base metals ended with a negative bias yesterday. If you're looking at it, aluminium was down 1.4%, zinc was down 1.1%, nickel was down 1.3%, lead was down 1.4%. Overall, it was weak. Even in China, aluminium is trading down by almost 1.3%. No doubt, zinc has managed to recover in China, and steel is trading higher, but the close on the LME was rather weak for the base metals. Most of the precious metals are trading with a positive bias currently. As far as fund flows are concerned, FIs were net bias to the tune of almost 375 crores. DI has sold in almost 460 crores in the cash market. Now, if you're looking at the Nifty managed to rally, but the other sectors did extremely well. The mid cap was up almost 9/10%. Small cap was up 0.8%, and the Nifty Bank was up 1.5%. The big problem came in from the Nifty PSU Bank. No doubt it managed to recover all the losses, but the Nifty PSU Bank index still traded with a negative bias. As far as some of the sectors are concerned, FMCG, energy and metal were the counters that rallied over 2% in trade. The other sectors that you need to watch out was the other thing is the wicks. The wicks managed to cool off, but still trading flat in trade. The Nifty was up almost 200 points. ITC, HDFC, Reliance and ICICI Bank were the main contributors. Majority of the gains coming in only on account of ITC, only through 3 losers on the Nifty yesterday. Now, how did the F&O market pan out in trade? Basically, there was short covering that was seen on the Nifty. The Nifty open interest was down 1%, but fresh buying was seen on the Nifty Bank. Open interest build-up was almost 4% on the Nifty Bank. Now, where the positions are being taken? So, what we're seeing is that, call writers are still active from levels of 10,400 to 10,600, and put writers from levels of 10,200 to 10,400. So, 10,300 to 500 becomes the important level where the market will be in at this point of time. But yesterday, since the market rallied very sharply, almost 200 points, call writers were forced to shed positions in open interest. So shed positions at 10,200 and 300, and high level of put buying happening on the put writing happening at 10,300 and 10,400. So it seems that the bulls want to take the market down, but the bears are giving heavy support now, and the support has moved from 10,200 right up to levels of 10,300 and 10,400 in trade. The PCR also moved up significantly, given the fact that call writers shed position and put writers were active and they were writing in trade. BML and Anther Bank are the 2 stocks in the F&O band currently. Now, if you're looking at some of the stocks, NIT Tech saw fresh buying on high open interest build-up of 13%. The other stocks that are in focus is Indian Oil, which saw fresh buying, open interest build-up of 8%, and on the long side, you had Andhra Bank, which saw fresh shorts, open interest build-up of 20%, but had news of its own in terms of some arrests that were being made. And IDBI is in the F&O band. Long unwinding was seen on the counter. Open interest build-up was down on almost 14%, and the counter was down 8%. So that's what we saw as far as the F&O market is concerned.
So today's stock of the day is Shankara Building Products, and there was a big bulk deal which came in yesterday when Akash Prakash led Amansa Holdings acquired some 3.5 lakh shares, or about 1.6% stake in the company at a price of about 1,755 rupees for a total consideration of a little over 63 crores rupees. But this is not just the first time that they have bought into the stake. Just a month back on February 8th, they had bought a similar number of shares, about 3.97 lakh shares or 1.7% stake back in February 8th. Taking a look at their December shareholding pattern, we can see that the promoters hold close to 56% stake, while the balance is held by the public close to 44%. The analysts are quite bullish on the counter, and in fact, all the 8 analysts tracking the stock have a buy rating on it with 0 sell and 0 hold rating, so 100% buy recommendation for this counter. And the 12-month Bloomberg consensus target price is also set at about 1,954 rupees, which indicates a return potential of over 11% from the current levels. Well, about the company, it is engaged in organized retail of home and building product materials. It got listed last year to a strong reception. It was oversubscribed as much as 40 times and gave listing day gains of over 37% and is up over 280% so far. The company has a market cap of nearly 4,000 crore rupees.
Monday brought with it a lot of cheer on the macroeconomic data front, with the consumer price inflation number as well as the index for industrial production coming in at much better than what they were earlier. First, let's look at what's happening with the CPI number. The CPI since June last year has seen a market increase. It went up to about 5.21 in December, but now in February it has come down to 4.44%, which is closer to the RBI's stated target of 4 plus or minus 2% for the inflation. So that is something that the economists are taking a lot of positive news from. Why did this number come down? Well, primarily it is because of what has happened with the vegetable prices. Now, vegetable prices is what essentially propped up the CPI number, headline number. That has been coming down. As you can see, in February, the growth in the prices has come down to about 17.57% as opposed to 27% in January. Because of this vegetable price, of course, we have also seen a moderation in the food inflation number. That has come down to about 3.26% in February as compared to 4.58% in Jan. On the fuel section as well, it's important to note that these numbers are still sticky. It's still at about 7.7%. So that is something that the analysts and the economists are still worried about. Similarly, on the other inflation numbers as well. Headline number still coming down at 4.44%. A positive story. What the economists will be watching for is the RBI's commentary on the 4th and 5th of April when they meet, when the MPC meets to decide on the monetary policy number. Now, next, after the CPI, is also to look at the IIP number. That has shown an improvement from December. It has gone up to about 7.5% in January, largely led by what is happening on the manufacturing front. And now, if this chart shows that the manufacturing number has been improving since November, so that that is giving a lot of cheer to the economists. Both when they're looking at in conjunction the CPI and the IIP number, they are, however, giving the warning that this is still a volatile period. Remember that there is some kind of base effect playing in for IIP. In the past, due to demonetization as well as GST, there was some kind of a moderation in growth. Now that has started to sort of taper off. That is what the economists are saying. In the coming months, what they will be watching is whether this tapering off actually plays out and whether this number is going to look better by the end of this financial year.
Let's now shift focus to the commodity space, starting off with oil prices. That actually slid by more than 1% overnight on the back of concerns of rising supply from shale and also a rising inventory data. So U.S. production or supply from shale basins is likely to rise up to 131,000 barrels per day for the month of April. That is as per government data as of overnight cues that we got. Also, the inventory data is likely to come in at 1.9 million barrels higher as compared to last week. Now, that is as per a Bloomberg survey. Backed by these factors, we are looking at downtick in the oil prices. Both WTI and Brent are trading with a mild negative bias after falling for 1% overnight. Moving on to the base metal space, the LME base metal index was under pressure and it fell more than 1% for the third time in about 4 days. As far as individual base metals are concerned, aluminium extended its weekly loss amid concerns of the global trade war. And based on this, Morgan Stanley has come out with a note in which they say that US producers will boost output in response to the tariffs, which will likely put pressure on the prices going ahead. Aluminium, zinc, nickel and lead fell more than 1% on London Metal Exchange, while tin and copper also ended lower in trade. Now, we can see that similar cues are coming in from the Shanghai Futures Exchange, where aluminium is trading more than 1% lower. Moving on to the gold prices, we have seen some bit of struggle for holding on to 2018 gains. The last time I checked, gold was trading flat for the year, and now this is on the back of an expectation that traders are pricing in an 84% chance of the Fed rate hike going into March. Staying with the Fed rate hike, Saloni Dhanuka is here to take us through the currency cues.
So speaking of Indian rupee, Jayesh, it snapped its two-day losing streak yesterday and ended 0.2% higher at 65.04 levels against the dollar. Now remember, the home currency opened on a strong note yesterday and surged nearly 23 paise against the dollar. However, later it gave up most of its gains and still managed to close 13 paise higher against the American currency. Now rally in local equities along with weak dollar overseas largely supported the rupee's up move. Well, speaking of the bond market, sovereign bonds gained yesterday on expectations of easing inflation, and hence we have seen the yield on the new 10-year benchmark security dropping nearly 4 basis points to 7.63%. On the global front, Asian currencies were trading higher as risk appetite returned after the release of mixed US jobs data on Friday evening. And speaking of dollar index, it ended 0.3% lower yesterday, and it now trades lower for the third consecutive session, well below the crucial 90 mark. Elsewhere, pound extended gains after UK Brexit Minister Robin Walker said that Britain and EU are close to a deal on an implementation period for Brexit procedure. And in terms of data, traders will keep an eye on US CPI data, which will be released today evening Indian timing. And lastly, speaking of dollar rupee, it is trading at 64.95 levels against the dollar in the non-deliverable forward market, which indicates a positive opening for Indian rupee in today's trade.
Now, according to terms that was seen by Bloomberg News, Tata Sons will sell 28.3 million shares in TCS in a block trade today that will help them raise as much as $1.2 billion or 8,100 crores. In fact, the offer price range has been set at 2872 to 2925 per share, which is a discount of 4.1 to 5.9%. So you could see some negative reaction coming in on TCS. But some of the other stocks that we are tracking also includes ACC and Ambuja Cements, where after putting their merger on hold, now they have signed a master supply pact for cement, clinker and other raw material supply, so whereby they will be able to reduce costs by using each other's capacity. So keep an eye out on both those names. That apart, there is a clarification coming in from Andhra Bank with respect to their exposures to the Sterling group of companies, which had been reported at 5,000 crores. They've said that the exposure stands at 1,147 crores, and out of that, the funded exposure is 578 crores. In fact, they've also said that they have already accounted or written off these companies as NPAs back in March 2015 itself, so keep an eye out on that name. JSPL is yet another one where the board will meet on March 16th to consider a QIP issue. Himachal Futuristic, again some capex plans as far as the company is concerned. They will set up an optical fiber plant in Telangana with a project cost of 260 crores. The plant will become operational in next year by April 2019. That apart, we're also tracking Sri Renuka Sugars on the back of the earnings that were reported yesterday. Weak set of numbers, revenues down 13.8%. A huge net loss of 2,267 crores was reported. That's mainly on account of an exceptional loss of 2,400 crores, and that's more to do with the loans and advances that were given to the subsidiaries. As far as the EBITDA is concerned, it came in flat at about 60 crores or so. In fact, the company has also said that they have done about 2,086 crores of investment and debt restructuring. So those are some of the stocks that you need to watch in trade today. But here are also top 2 international business stories.
It's something of a battle, if you will, in the boardroom behind the scenes. How is it that David Solomon, who was co-president with Harvey Schwartz until moments ago, emerged the sole president? And why is Harvey retiring from the firm? One thing this leaves me with is the thinking, or at least the thought, that this is going to revive at Goldman the age-old debate over who should run the firm. Should it be a banker or should it be a trader? Harvey Schwartz had a background in both. Started in investment banking at Goldman Sachs and eventually became a co-head of global securities. David Solomon, on the other hand, is originally a Drexel guy. David Solomon comes out of the high-yield world, leveraged finance, moved into investment banking in a much broader way at Goldman Sachs, and of course ran that business before becoming co-president of the firm with Schwartz back in 2016. But David Solomon, well, first of all, neither of those guys is a Goldman lifer. Schwartz came to Goldman from Citigroup, or Citicorp as it was known back then. And David, of course, was at Drexel, as I mentioned, and then subsequently went to work for Bear Stearns. So each of them brings a different background and a different character. The fact that David is in his blood a leveraged finance guy says something about his character. If you spend any time with him, you know how gregarious he can be. He is not Lloyd Blankfein in temperament, and certainly not in background. Lloyd is a J. Aron guy originally, came to Goldman through that acquisition back in the early 1980s, and is in temperament and mood, I would say, and in the way that he runs the firm, very much a trader. David Solomon, if he does end up being CEO to succeed Lloyd at some point.
There was a note out a week ago from CFIUS, the Committee on Foreign Investment in the U.S., that they were looking at potential security implications for the deal, and the president kind of front-ran a lot of those talks and just flat-out banned the deal. So it looks like it's over for Broadcom and Qualcomm.
Okay, and does it seem like this was a well-thought-out decision, or was it just a quick, more of a hasty reaction to, national security threats?
It's certainly a quick decision. There's not a whole lot of transparency as to what goes into CFIUS determinations. There were a lot of behind closed doors Security Council meetings. There's a big concern for investment in 5G. That's been an express priority of the Trump administration. And so, understandably, a swift decision on something that protects U.S. interests in 5G, I guess is understandable, but it's certainly a bit of a surprise to see this quick of a decision from the Trump administration.
Matt, real quickly, what's this all going to mean when it comes to the shareholder meeting, these board nominations, and Broadcom trying to take seats on that board?
Yeah, I think shareholders were, in a way, looking forward to some discussion about the Broadcom bid because Qualcomm's technology licensing business has been struggling recently. Apple has been underpaying royalties to the tune of about $4 billion a year, and so there was certainly some interest in shifting away. So it kind of brings that dispute front and center.
Bharat Dynamics IPO opens today. Now, this is the 7th IPO of 2018. Now, the company is looking to raise as much as 961 crore rupees at a price band of 413 to 428, and at the upper end of the price band, the company is valued at close to 7,844 crore rupees. Now, if we see, the complete IPO is an offer for sale where the government is selling its stake. Now, Bharat Dynamics is a government-owned Mini-Ratna status company which is managed by the Ministry of Defence and is engaged in the manufacturing of missiles. Now, Indian Army is the primary customer as the company generates 98% of its revenue from them. As of 31st Jan, the company had an order book of close to 10,543 crore rupees, which gives a good revenue visibility for the next 2 years. Now, if you see, Bharat Dynamics manufactures different types of missiles, but is the sole supplier of surface-to-air missiles and anti-tank guided missiles to the Indian Army. Now, the company has 3 manufacturing facilities in the state of Andhra Pradesh and Telangana, and is in process of setting up 2 more units in the state of Maharashtra and Telangana. Now, if you see, the company generates revenue from 2 types of products, that is manufactured and traded. Now, the manufactured products are those which are made by the company, and the traded products are those which are not manufactured by the company but are provided by the company as an ancillary product to their customers. Now, the sale of traded products is not frequent, and if you can see here in the last 3 financial years, they constituted around 22 to 29% of its total revenue. But for the first half of financial year 2018, it was around 44% of the total revenue. Now, if you see the financials of the company's revenue, net profit, and EBITDA grew at a compounded annual growth rate of 39%, 11%, and 90% over FY14 to FY17. On the balance sheet side, if you see, the company is a debt-free company with a book value per share of 89 rupees, and as of 30th September, the company had a total cash of around 1,300 crore rupees on its book. That translates into a cash value per share of around 71.5 rupees. On the return ratio side, the company's return on equity has been declining, but the other 2 return ratios have been stable. For FY18, on an annualized basis, the company's return on equity was 21%, return on capital employed was 21%, and return on asset was close to 4%. On the valuation side, I'm comparing comparing Bharat Dynamics with BEL, because though BEL is not a direct peer of Bharat Dynamics, but it is a government-owned defense company having the same client, that is Indian Army. And you see on the valuation side, on an annualized basis for FY18, the shares of Bharat Dynamics are offered at a cheaper valuations. The price to earnings stands at 22.7, market cap to sales at 22.2, EV to EBITDA at 13.3, and price to book at 4.8. Lastly, on the brokerage side, if you see, all the brokerages have a subscribe rating on this IPO on the back of its strong return ratios, robust order book, and the good growth prospects that the company has going forward.
Let's now look at some of the stocks that could be in action based on yesterday's delivery buying and selling. The first stock on your radar should be Bajaj Auto. Now that gained about 1% in trade and saw delivery buying of more than 50 crores. The delivery volume shot up 105% at nearly 2 lakh shares as compared to its 5-day average, and the total volume surged just about 23% at nearly 2.75 lakh shares as compared to its 5-day average. Second stock to watch out for would be Crompton Consumer Electrical. That was actually down about 3% in trade and saw delivery selling of more than 50 crores. The delivery volume surged 185% at about 23 lakh shares as compared to its 5-day average, and the total volume shot up 188% at about 25 lakh shares as compared to its 5-day average. Last and final stock to watch out for would be Sun TV. That was up about 1.6% and saw delivery buying of more than 50 crores. The delivery volume shot up 54% at nearly 6 lakh shares as compared to its 5-day average, and the total volume was down 7% at about 16.5 lakh shares as compared to its 5-day average.
On the big brokerage calls for the day, first we have is Motilal Oswal on Future Consumer. Now the brokerage has initiated coverage on the stock with a buy rating and a target price of 76. Now according to the brokerage, among the Future Group stocks, Future Consumer is best placed. It says that Future Consumer is the best play on huge window of opportunity for brands using modern retail as distribution network. The company is expected to see a significant margin expansion on the back of its improving revenue mix and operating leverage. Also, it is likely to be profitable on a consolidated basis for the financial year 2019, according to Motilal Oswal. Now, the company is growing rapidly via its distribution network and portfolio expansion, and on the back of this, the brokerage is expecting the company's revenue and EBITDA to grow at a compounded annual growth rate of 39% and 147% over FY17 to FY22. Lastly, it says that Future Consumer is an attractive opportunity from a 3-year perspective. Second, we have is Credit Suisse on NIT Technologies. Now, the brokerage has maintained its outperform rating on the stock, but has raised the target price to 1,050 from 850. Now, according to the brokerage, smaller IT companies are relatively better positioned as they are identifying their specific domains to differentiate with the larger peers. Now, sharper focus on subsegments and more focus on top clients will be helping the company going forward. Now, NIT Tech's revenue growth has not only been improving over the past few years, but is also growing ahead of the industry rate, according to the brokerage. Also, deal win momentums for the company has been healthy in the recent quarters, and this can sustain, according to Credit Suisse. Lastly, it says that the stock has done well in the past, and the valuations are still not stretched. Given the recent surge that we have seen.
सबसे बड़ी मांग ये थी कि उनको जो वन जमीन है उसका पट्टा मिलना चाहिए, एफआरए कानून के तहत उनको उसके राइट मिलने चाहिए। सरकार ने इसमें पहल लेकर यह आश्वासित किया है कि अगले 6 महीनों में ऐसे सारे दावे जो है उन दावों को हम लोग मंजूर करेंगे और विशेष रूप से कानून में उनको जितनी ज़मीन अलाउड है वो कानूनन ज़मीन उनको दी जाएगी, उससे कम नहीं दी जाएगी। इस बात को हमने मान्य किया है।
It's very focused on particular issues and aspects of problems. There is no, the larger issues, that's why I said the protest isn't ending. There are much bigger problems ahead. They have won a very famous victory today. They've done it democratically, peacefully, with incredible discipline. Please understand that when a poor agricultural laborer leaves her home for a week, she actually immediately suffers a drop in food, a rise in hunger, a loss of 1/4 of a month's earnings because she's a daily wager. The farmer who leaves his children and her children and comes out leaving the fields unattended, they suffer, they lose a lot of money. For me and for you, it should be the fact that with such difficulties to themselves, such damage to themselves, they still came out here and made their point. In my view, today they made the deaf hear and the blind see.
Well, the long march of farmers in Mumbai comes to an end, and there's finally clarity on the leadership succession at Goldman Sachs. And then, of course, there's all the live market action that you'll find right here on Bloomberg Quint Live. But there are also a few stories that you should find on the website bloombergquint.com. Here are just a couple. The Reserve Bank of India has tightened guidelines for hedging commodity price risks and freight risks in overseas markets by limiting the tenor of all banking instruments in trade finance areas. The new norms take effect from next financial year. After having sent notices to Axis Bank, HDFC Bank and Tata Motors to investigate and fix breaches that allowed for the leak of price-sensitive information on WhatsApp, the SEBI yesterday sent a similar notice to Bata India. Well, that's all you need to know going into trade today, but up next is Indian Open, and that'll take you through Market Open. Thanks so much for watching. This is Bloomberg Quint.